Good morning. My name's Walter Sanford, and I've been selling real estate for 35 years, and I hope you guys have seen me in some of the seminars that we've done. I hope that I get to come out here locally to one of your locations in the future. But in the meantime, I have something important to talk about this morning. That's money. And I tell you, money has always been a short subject in most of the real estate training, and so I took down some notes. I wasn't particularly successful. I started winning a lottery when I was a kid, and we built that. My partner and I, we built that into a large inventory of real estate, investment real estate, built mostly on leverage. And that was in the 80s, early 80s, and you know, things got tough there with interest rates, and we lost most of it. And I started over again, graduating from USC, and got married and built the empire back in real estate brokerage from my commissions. And then, because I was working so hard and numerous other reasons, a divorce took about 2/3 of my net income. And so this is the third time around for me. I currently have a real estate portfolio that the income far exceeds the amount of money ever made from real estate or my speaking business put together. And so I want you guys to understand that even if you have some setbacks, you're in the world's greatest business, and I'll show you how to get rich. So I took some notes of what I did and some of the things that you might want to consider as priorities to see if you can't have a plan to exit, to retire early. Number one, consistent, proactive seller lead generation. And I mean this. There's very little training. You guys are requesting continuing education all the time, and that's really not training on how to make more money. I train on how to teach real estate agents how to consistently close more transactions for more money and have happier clients. And so that all stems from, and this could be a multi-day seminar, but real quickly, it all stems from knowing what you're going to do every day in going after listings, owning the inventory, proactive seller lead generation, and whether it's expires for sale by owners, assisted living centers, old people in big houses, out-of-state owners. I've got 67 methods that we teach, that we show, that we've perfected, multimedia, to go after the best demographics for sellers. You need to do that, and you need to look up my products. You need to get some training in that. You need to be consistent, because that's the foundation underpinning of everything else I'm about to say. You need money to make money, bottom line. Number two, I want you to know when your money is coming in. A lot of my clients, a lot of people I have in seminars, coaching clients, have cash flow problems. Get a whiteboard, calendar, yearly calendar. Write down the amount of commission net that you're going to receive on the day that you're going to receive it. You start seeing holes in the schedule. You can see that you've got November handled and December looking fine, but there's nothing for January, and your next closing's not until early March. You know that you're going to have to fill that area, get a short-term loan, or sell something. No more cash flow problems that create glitches in your credit, because we're going to need credit later on to do some of the investing I'm talking about. So let's see if we can't get a handle on your cash flow. The minute you see there's a hole, I guarantee you something will happen to fill it. Something will come about, but you've got to be aware of it first. Next, I want you to start something brand new and unique in real estate. It's called a savings account. If you aren't putting away 10% of every commission check for future down payments on real estate investments, you're making a huge mistake. You're going to be working in this business for the rest of your life. Your rental income will never take over your normal income. You're going to be tired. At some point, 15 years, 20 years, you're going to wake up with not as much energy toward this business as you once had. I'd like you to have your assets start working for you, and that's buying real estate. 10% saved toward a down payment on every closing check, and 10% for income taxes. I got to tell you, I meet more real estate agents in trouble with the IRS. Stop it. You can't be in trouble with the IRS. They're bigger, tougher, stronger than you. They're going to chase you so hard you cannot ever get away. Don't do it. Don't fall into the trap. Just get it handled. Pay your estimateds. Save some money for the taxes. 10% might not be enough, but it's a start. I'm hoping that in a 35% tax bracket, after you deduct your expenses, it would be somewhere around that neighborhood. But bottom line is, it's a start. Let's get started there. Next, know your highest interest rate. My goodness gracious, I meet too many real estate agents in debt. Know your highest interest rate. Make that your primary goal to start paying additional principal toward that every month. I need you to start paying down the stupid interest. Now, I'm okay with secured loans, but I'm not okay with toy loans and with unsecured loans. Let's get that stuff paid off. Credit cards, ridiculous. The boat loan, the boat that you hardly ever use. I have a coaching client with a $150,000 boat. No reason for him to have that. Pure ego. We talk to him, it's gone. So let's see if we can't make some smart financial decisions. And that brings me to toys. I'm to blame. I owned Rolls Royces and waterfront houses and Rolex watches and everything else. And I'm telling you guys, I wish I had the money that I invested in toys, because that money will be worth 10 or 20 times that amount of money based upon my successful real estate investments. Let's see if we can hold down the amount of toys until you get just a little older. My dad used to say that guy has a big hat and no cattle. Well, let's see if we can get away from the big hat, no cattle syndrome. Next, kids, let's see if you can't start a 529 plan. That college is coming up quick. I'd like to see if you put some money away, and usually a 529 plan is the highest return with the potential of some tax deductions. Talk to your accountant about that. And while you're doing that, and while you're talking to your accountant, make sure that you have your IRA, SEP, Roth all set up and fully funded. I want that funded along with your income taxes. There is no better investment to use the government's money to invest in the market. And to do that, I find it easy to do that online. It makes it able for me to move money much faster. Fidelity.com seems to be the one that works best for me. That means if you have some extra money and silver drops from $34 to $26 again, and you knowing that with QE3 we're depreciating our currency, and that means your dollars are worth less, assets are worth more, you might consider going ahead and moving that quickly in that way, meaning in watching some commodities that you might have an opportunity to lower price, and being in Fidelity allows you to move it to that asset quickly. But your greatest asset's going to be real estate. You know, love, dream, you work that market, you know what a lucrative opportunity looks like. I want you to be in a position to be able to buy stuff. And buying stuff means we don't buy for flips. Only dumb people buy flips. People that do flips make money on the upside. They lose money when it's stagnant, and they lose a lot of money when it goes down. The people who make money in real estate buy for keeps. They buy for a long period of time, and they allow the tenants to pay off the mortgages. That means cash flow real estate. That means that after a 35% expense factor, you have enough money to pay all the mortgage and the taxes. So let's see if we can't go out and start making some smart real estate decisions. If you're in a high-priced area, you might have to drive 50 miles. Let's see if we can't get some real estate. You know it, you love it, you understand it. I managed a ton of real estate while I was selling real estate. It allowed me now to retire wealthy with lots of real estate and a huge amount of rental income, only because I was in front of it every day. It was my passion. You guys, let's start treating money better. Let's see if we can't actually, instead of you working for money, having your assets earning you your money. That's what we do here. That's the light at the end of the tunnel. Thank you very much.